Imagine being financially free in just 2 years? Today, we are going to reveal how, by following Robert Kiyosaki's investment advice, you can achieve it. For those who don't know him yet, Robert Kiyosaki is not just an author, he is a personal finance revolutionary. His famous book, Rich Dad, Poor Dad, has changed the way millions of people think about money and investing. Kiyosaki, raised by two father figures, his poor dad, a conventional educator, and his rich dad, a shrewd entrepreneur, learned the crucial differences in how each viewed money and opportunities. Focuses on investing wisely, building assets, and challenging the financial status quo. In a world where the financial future seems uncertain, following Kiyosaki's advice could be the key to ensuring your prosperity. Investing is not just about increasing your savings. It is about understanding the market, taking calculated risks, and, most importantly, preparing you for a prosperous future. Today we are going to dive into the investment strategies that Kiyosaki suggests so that this year you can be in an enviable financial position. Ready to discover what these assets are and how they can lead you to financial freedom? Let's go! Before delving into the specific assets recommended by Robert Kiyosaki, it is crucial to understand his investment principles. These fundamentals are the cornerstone for any investor who wants to achieve financial success. One of Kiyosaki's key concepts is the difference between assets and liabilities. An asset is something that puts money in your pocket, while a liability takes it away. This simple truth is the core of his investment philosophy. Kiyosaki maintains that the key to accumulating wealth is not only in earning more money, but in acquiring and holding assets that generate passive income. This can include investments in real estate that generate income, stocks that pay dividends, or any other investment that produces cash flow. The mistake that many make is spending on liabilities, things that decrease in value and do not generate income, confusing them with assets. Another pillar in Kiyosaki's teachings is financial education. According to him, the traditional educational system fails by not teaching about money and investment. Therefore, he urges people to educate themselves in finances. This not only includes learn about different types of investments and strategies, but also understand the financial system, taxes, and how to protect your assets. Financial education is an ongoing process that empowers you to make informed decisions and take active control of your financial future. Finally, Kiyosaki emphasizes the idea of making your money work for you, rather than you working for the money. This means investing so that your assets generate additional income, which can eventually free you from the need to work for a salary. This concept challenges the traditional notion of working for a fixed salary and saving a little. Instead, it is about building an investment portfolio that not only grows in value, but also provides a steady stream of income. With these principles in mind, we are ready to explore the specific assets that Kiyosaki recommends for investing. Stay with us to discover them. To make smart investment decisions, we must first understand the current environment. What is happening in the markets? Let's analyze it. This year presents a unique economic scenario. After several years of global changes, including a pandemic and widespread inflation, markets have shown signs of both recovery and volatility. Interest rates, which are a key thermometer of the economy, are going through a period of stabilization after a cycle of increases. The European Central Bank, ECB, has frozen rates at 4.5% and no rapid decreases are expected. This scenario affects inflation expectations and policy decisions. Investment. Inflation is expected to stabilize, although it is important to protect against it. Investing in stocks could benefit from moderate inflation. In addition, bonds are anticipated to represent a good opportunity, as they could offer attractive returns as prices rise. Rates go down. Before continuing, if you find this information useful, leave a like and subscribe so you can continue enjoying more content like this. Let's continue. Now that we have a clear understanding of the current economic landscape, let's dive into the specific assets that Robert Kiyosaki recommends for investing in this environment. Asset 1. Investment in real estate. Kiyosaki has always advocated real estate as a fundamental pillar of investment. Investing in real estate can offer both rental income and long-term appreciation of the value of the property. The current real estate market is experiencing price adjustments, a decrease in home sales, and an increase in interest from international investors, Among other changes, an increase in real estate investment activity is anticipated toward the second half of the year, driven in part by hopes of avoiding a recession and achieving a soft economic landing in the United States. In the residential sector, housing affordability is expected to improve and listings of homes for sale will increase. Demand for rentals and apartments and large houses will grow as more young families choose to rent, challenging the traditional aspiration of ownership. Young people, particularly millennials and Generation Z, tend to favor renting over buying due to high home prices and difficulty accumulating a down payment. This shift in housing preferences could be a response to current economic challenges and the changing priorities of younger generations. Remember, investing in real estate also involves managing or delegating the administration of your properties. Asset 2. Stock market. Stocks represent another key area of investment, according to Kiyosaki. It's not just about buying stocks at random, as the current market is very polarized in terms of stock valuation, with large company indices having seen big rises, while small companies have hardly appreciated in recent years. It is important to look for stable companies with a proven track record of performance. A more challenging environment is anticipated for stock markets this year, with slower economic growth, persistent inflation, and geopolitical risks that could negatively impact corporate earnings and stock performance. The result of the elections in the United States will also have an influence on quotes. Additionally, higher interest rates and excessive valuations are expected to leave stocks overvalued, which could lead investors to seek balance in their portfolios, possibly favoring the bond market and value stocks. Asset 3. Investments in precious metals. Precious metals, such as gold and silver, have traditionally been seen as safe havens, especially in times of economic uncertainty. In 2024, opportunities exist for both investors and industries, with upward price trends in several metals and sustained demand in key segments such as jewelry and industrial applications. Kiyosaki believes that investing in gold and silver can be a good strategy to protect your assets against inflation and monetary devaluation. Precious metals are not expected to generate income, but they can be an important investment to balance and diversify your portfolio. The key is to understand that these assets are typically long-term investments and may not offer quick returns. Some ways to make these investments are physical metals. This is the most direct way to invest in precious metals. You can buy gold, silver, platinum, or palladium in the form of bars, coins, or even jewelry. The advantage of this method is that you have direct ownership of the metal, but it also involves the responsibility of safe storage and the risk of theft. Another way is precious metals index funds, or ETFs. This is possibly the most convenient way to invest. These funds track the price of a specific metal and are traded on stock exchanges, like regular stocks. They offer the advantage of easy liquidity and the ability to invest in precious metals without the need or inconvenience of physically storing them. You can also invest in precious metals through shares of companies that are dedicated to the mining of these metals. Although it usually has a higher risk because the performance of these stocks is linked to the price of the metal they extract and the operational efficiency of the company. Asset 4. Cryptocurrencies. Cryptocurrencies have gained a lot of attention in recent years, and Kiyosaki has not ignored them. However, he advises caution. In 2024, cryptocurrencies' expectations are positive around Bitcoin ETFs and price predictions. Although cryptocurrencies can offer high profit potential, they also come with high risk. Kiyosaki suggests that investors interested in crypto should educate themselves deeply on the subject, understand the risks involved, and not invest more than they are willing to lose. He also recommends looking beyond popular cryptocurrencies and exploring the broader ecosystem of blockchain technology. Last but not least, Kiyosaki emphasizes investing in education and personal growth. He firmly believes that the most valuable investment you can make is in yourself. This includes not only formal education, but also courses, books, seminars, and any resource that expands your knowledge and skills, especially in the area of finance and investment. In 2024, with the constant advancement of technology and the evolution of markets, staying updated is more important than ever. Kiyosaki advises dedicating time and resources to continually learn, as this will equip you with the necessary tools to make better investment decisions and adapt to market changes. Now that we have discovered the assets recommended by Kiyosaki, it is crucial to understand how to integrate them into a solid investment strategy. Let's see how we can manage our investments for the future. Successful investing requires a long-term view and careful risk management. It's not enough to choose the right assets. You must plan how and when you will invest in them. Set clear, realistic goals for your portfolio and consider your investment horizon. Are you investing for retirement, your children's education, or to buy a house? Additionally, it is essential to understand and manage the risks associated with each type of investment. This includes diversifying your portfolio so you are not overly dependent on a single asset. Prepared for market fluctuations. Remember, patience is a virtue in the world of investing. Diversification is a key tool in risk management. You don't want to drop in one sector of the market to ruin your entire portfolio. Investing in a variety of assets, such as real estate, stocks, precious metals, can help balance risks. Each asset class has its own cycles and will react differently to economic and political changes. A diversified portfolio is better equipped to weather market storms and take advantage of different growth opportunities. Finally, staying informed and adaptable is crucial in the dynamic world of investing. Today's market is different from previous years and will continue to evolve. Stay up to date with financial news, follow market trends, and adjust your strategy accordingly. Participate in seminars, read books and articles, and consider talking to financial advisors. A successful investment strategy is one that evolves over time, adapting to new circumstances and taking advantage of new opportunities. With these strategies in hand, you are well equipped to take advantage of Kiyosaki's recommendations and maximize your financial potential. Now is your turn. Use this information as a springboard to your financial prosperity. The journey to wealth begins with one step, and that step is yours to take. As Kiyosaki says, the biggest risk is not taking any. Do not wait for the perfect moment. Start today with what you have and grow from there. Thank you for joining us on this episode. Don't forget to subscribe to the channel for more financial advice and leave your comments below. See you on the next video.